All right, guys, welcome to another live stream. Welcome to another live stream. Happy Sunday. Happy Sunday. All right, so in today's live stream, we're going to talk about what we can expect from the markets. I think it's going to be very bullish this week because of Jerome Powell's speech Friday at Jackson Hall. And yeah, it looks like he's very dovish, and it just sets the tone for these rate cuts, right? Before I continue, let me check my mic. Give me a second. Give me a second. Let me check my mic. And it just sets the tone for these rate cuts, right? Before I continue, let me check my mic. All right, looks like my mic is working pretty good. Looks like my mic is doing pretty good. And then after that, we'll play a few games of Blitz. Okay, so let's get into the markets. Let's talk about what we can expect. So here's a market outlook for this week based on Fed Chair Jerome Powell's Jackson Hall speech, focusing on stocks, crypto, and the broader financial trends. Okay, so stocks in broad markets. So Powell struck a dovish tone at Jackson Hall, significantly increasing the likelihood of a September rate cut. Yeah, so basically everybody was watching the speech to see, okay, is he going to be hawkish? Is he going to be dovish? And can we expect this rate cut going into September? Now, if we look at the Fed Watch tool, it was at 70, I think it was at 75% before the speech. And as the speech was taking place, it went all the way up. And as it finished, it went up all the way to 90% or like 89, 90%. So obviously, the speech was very bullish for the market, and what changed the expectation or the percentage in rates was that he was saying that he has a more flexible stance towards that 2% target that he's been talking about forever, right? He's always like, we need to get inflation towards that 2%, 2%. And during that meeting, he's saying maybe we need to take a more flexible stance on this inflation target, and maybe it could be a slightly higher, right? Maybe we don't need to aim for that 2%. So obviously, he's not going to say we're going to cut rates in September, but that's pretty clear sign that he is going to give a rate cut in September. Now, a lot of people are talking about 25, 50 basis points. Who knows? Some people are leaning towards 50 basis points due to the speech. But, I think at minimum we get that 25 basis point cut, which is going to be really good for the markets. Okay, so futures data now show about 85 to 90% chance of a 25 basis point cut, up from roughly 75% just before. It says the markets rally sharply in response to the speech. Dow Jones Industrial Average jumped 846 points, 1.9%, to a record high. The S&P and Nasdaq Composite each gained around 1.5 to 1.9%. It says the Russell 2000 jumped 3.9%. And then it gets into specific sectors. So gain span sectors. So it says tech and growth names rebounded. So if you remember, the NASDAQ was down like a few days ago, and then like the Dow and the New York Stock Exchange was up. So tech was suffering a little bit, but due to this news, it did rebound. It says while consumer sentiment varied depending on earnings. So yeah, I think it was this week or last week. Well, not this week, but last week and the following week, I'm not sure it was last week or the week before that. Retail earnings was coming out, so it says TJX surged, Walmart disappointed, while home builders and travel stocks got a boost amid expectations of a cheaper lending. So things like Lowe's, Home Depot, it looks like those stocks got a boost. And yeah, and I was saying that those are a good indication of how the economy is doing, because those are kind of the stores that people go to, right? Lowe's, Home Depot, Walmart, Target. Those are stores are, retail stores where people often visit. And if those earnings don't look good, then it could be telling for the economy. It says Treasury yields fell, especially the 10-year, and the dollar weakened. Okay. Caution is warranted. Analysts caution this could be a late summer rally, short-lived if upcoming data disappoints. Volatility may return in September and October. Yeah, I think we have a few economic data points to come out before that rate cut. So anything can happen between now and September 17th, which I think is the time the Fed will meet to announce whether there'll be a rate cut or not. So yeah, we're still not out of the woods yet, but it's looking pretty good, right? It's looking pretty solid for a rate cut going into September, and we're seeing that a lot of these assets are pricing in a rate cut. Okay, so let's go over the crypto market. So crypto markets rallied alongside equities as rate cut optimism rejuvenated risk appetite. So Bitcoin climbed above 114. If you remember, we took a slight dip the last couple weeks. We were at 123, if you guys remember, 123. Then we fell to like 116, 117, and then all the way down to 112 because of that PPI data that came out. If you remember, the producer price index, it still showed that there was like inflation, uncertainty, and things like that. So yeah, that kind of tanked the market, and now we got that rebound due to this speech and due to the optimism towards that targeted inflation rate of 2%. So Bitcoin right now, if I look at the price of Bitcoin right now, it is at 114. Let's see. Yeah, 114, 423. What's keeping up is Ethereum. Ethereum's at 4,778. So Ethereum's staying really strong, which just goes to the point that we are imminent. It's altcoin season is very imminent. So I think this is kind of the transition we're making, where liquidity is coming out of BTC. Well, not necessarily out of BTC. I think there's still institutional people coming in and buying BTC. That is the OG of the space. That is the blue chip asset of crypto, and people are always going to be buying Bitcoin. But what we're seeing is more liquidity flow into altcoins. So that's when you see that Bitcoin dominance. Right now, I think it's at 50. Let's see. Yeah, 58.23. It looks like it's about to crack 58%. So this is very bullish for all altcoins. And I think in this next week, we're probably going to see a lot more of that, especially if Ethereum hits its all-time high. Well, it already actually hit its all-time high. If it breaks its all-time high, I think this week we could be very likely that we crack 5,000 for Ethereum. And that right there is really going to trigger altcoin season, because we already hit the Bitcoin dominance indicator. The altcoin season indicator is going up. And then, once we get that crack below 58, it's really going to be altcoin season, right? Okay, so it says crypto adjacent equities like MicroStrategy and Coinbase climbed 5% and 7% respectively. Yeah, we talked about Gemini going public, IPOing, and we talked about how Coinbase did when it IPO'd. Remember, I think it IPO'd around 30 to 40 bucks, if I'm not mistaken. Then it crashed, and then Coinbase is at like $200-300, and then the same thing for Circle. Circle IPO'd really nicely, tanked a little bit, and now it's up like close to $200, I think, or over $200. So you always see that in a bull market, like these equities, like Coinbase, Gemini, Circle, Robinhood, I think, too. Did pretty well. Like those are always going to do well. Those are kind of like the staple crypto companies in the space. And you always see during a bull cycle that these companies go up heavily in price. So if you're a person that likes crypto but doesn't really want to get into the coins, those are actually good companies to look at, right? Because they always end up going up. They provide exchange services for people to trade crypto. And always during a bull market, altcoin season, trading fees go up. They start charging, not start charging more, but they start getting more in fees. So they just ultimately ended up doing well during this time. MicroStrategy is just buying BTC, so can't really go wrong with that. Now, I do think MicroStrategy is kind of like over leveraging. I'm not sure how they're going to do. I mean, I'm pretty sure they've been buying for a long time and they've withstood the bear cycle. So I think this next bear cycle won't be that bad for them because institutional people are in the space. So it's not like I don't think BTC will be crashing so hard. I do think it will crash. So if we get to like 150, 170, maybe we do get back to that 80, 90,000 range. But I think they'll still do well. Now they are taking out a lot of money to buy BTC. I'm not sure how that works out as far as their loans and paying the bank and stuff like that. I know what is going to help in the next few months is that we are going to get rate cuts. So, borrowing money for them is going to be cheaper for using that to buy more BTC, right? So altcoins such as Ethereum, Solana, BNB, and others also rose. Yeah, BNB is doing pretty good, silently just moving up. It says, however, Powell's emphasized a measured approach to rate cuts, not a fast, aggressive easing cycle, as outlined by CoinDesk. Risks are still tilted. Inflation could surprise higher with employment risks while employment risks are looming. Yeah, again, it's not like we're like, okay, for sure, rate cuts, but it's a high probability that we get it. Anything can happen during that period. It's some type of economic report, PPI, CPI, and tell us something totally different. But I think the table's set. So we'll see. The silver lining is that Bitcoin's narrative as a scarce asset remains intact, potentially supporting its price in a cautious easing environment, even if a broader speculative crypto flow remains muted for now. Okay, so again, just a summary of what we can expect this week to watch. So for equities, continue momentum. If investors' optimism holds, especially ahead of upcoming earnings and economic data. However, a sign of tricky or sticky inflation. Oh, did I? Hopefully didn't. Okay, so the page just needs to be refreshed. Okay, I think we're still good. We're still alive. However, any signs of sticky inflation or strong job reports could trigger volatility. Treasuries in dollars, so bond yields may stay soft, reinforcing easing expectations if data supports them. The dollar may stay weak amid rate cut bets, right? And then crypto, potential for a modest upside in BTC and large cap tokens. Sustained moves depend on Fed tone and US data. Surprises either way could whip volatility. Okay, so yeah, it's pretty much watching any economic data that comes out up until that Fed meeting in September, and just watching prices, watching key indicators, depending on what assets you're in. And yeah, I think that is pretty much what we can expect from this week. All right, so let's play some chess, and I will be playing Blitz. All right, cool. All right, got that W there. Do 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 do. I haven't played that opening. So E4, bring out the knight to F3, and then I was bringing. What did I do? Was it C4 or D4? That's an interesting opening. It looks like it's been working. Okay, so he wants to do that. Let's do this. Just do that. Okay. There go do this. And then I take his queen. Hopefully he doesn't move his queen. There we go. Queen. All right. Should do this. Should work out. I do that. Yeah. I think he thought he had a checkmate. I need to hurry up here. We drawed it out. Lost a point there. All good. All right, let's do another one. Take. Take. There we go. Okay, should be fine here. There we go. we go. Perfect. Checkmate. That was really good. Let me check my game review on that one. See how well I played. 86%. So this has made 2 mistakes, 1 great move, 11 best moves, no miss. And I don't think you guys can see it. Hold on. Right there. All right. Yeah. So 1 great move, 11 best moves, 2 mistakes. I usually don't like to make any blunders. Mistakes are fine. Because usually mistakes are, it just wasn't the optimal move. It wasn't the best move. So you could kind of get by with it, but it's not the best option. All right, so let's play one more, and I think we should be good for the day. All right, get rid of this, and all right, let's do this last one here. Here. I don't care for that. Let's bring this out. I think I can take, right? I think we're good here, right? Here, and do that. Got to bring this pawn up to b6. Should create a nice fortress here. Let's do that. All right, that's fine. I think I want to break this. f5. All right, good trade. That's fine. If I do that, that's not going to be good. Okay. Let's break this. How about that? Ooh, that was a free pawn for him because he's going to have a fork, I think, if I take. Yeah, but he didn't do it. Oh, he got a fork anyway. I wasn't paying attention. All right, let's see if I can still pull this through. I feel like I could still pull this through. Perfect. Got that free rook here. He fell for it. There we go. All right. think that's a free pawn, no? I think it is. All right, let's do this. There we go. It's over, buddy. Do that. Perfect. There we go. Good play today. There. And let's checkmate. All right, guys. That's pretty much it. Ran up the blitz rating a little bit, 1224. All right. But yeah, so that's what we have to expect, or what we can expect this week. A lot of continuation regarding that Jackson Hall speech on Friday regarding the ease of that inflation target of 2%. So I think stocks, crypto will rally hard this week, especially things like altcoins, which we can see the Bitcoin dominance come down a little bit, or a lot of it, right? It's at like it's getting close to that 57%. And I think it's going to crash a lot harder in the coming weeks. So pay attention to that. Also, blue chip stocks, anything on the NASDAQ is making a comeback. I think anything risk on is going to do very well this week. And yeah, just look for any economic data that will maybe change the stance of Jerome Powell going into September. I don't think that's going to be the case. I think we kind of have this rate cut in the bag. So yeah, that's pretty much it. I'll see you guys in the next one. Take care.